Testing sound. Okay, I think we're back, folks. All right, fantastic. Awesome stuff. All right, so sorry about that delay. It took us 2 minutes to get this sorted out. Can you all hear me? All right. Okay, perfect. All right, folks, so a lot going on this week, and I'm going to go through a couple of the things very quickly. I'm not going to take more than half an hour, and then I'm going to try and go through the technicals as super fast, as quickly as I can. So let's go through a few of the things that happened during this week. Japanese banks dumping US treasuries, not all, but some, quite large amounts, which is really interesting. Because of the inverted yield curve, their carry trade has gone wrong. So both sides of this carry trade on the Japanese yen are working out badly at the moment. The Swiss National Bank cut rates, which was a bit of a surprise, down to 1.25, I think it is, or is it 1.5, but really low. And despite that, the Swiss franc is strengthening. They cut the interest rates to try and reduce the strength of the Swiss franc, but it hasn't worked so far. It hasn't been working, despite the huge carry trade difference. The Bank of England kept their interest rates on hold. Their CPI was down to 2%. That was their target rate, and they achieved it. The Fed comes out next month with its interest rate deliberations. Okay, you've got an echo. Let's get rid of the reverb. Hang on 1 second. I think we can do this. Global settings. We want to get rid of the monitor and output. Monitor off. Test audio. Testing. Okay, I've tried to get rid of the monitor. So the Fed comes out next month, end of July, deciding on the interest rates, and it looks like they're going to hold rates, surprisingly. But although I think we may have a surprise cut, and a lot depends on, well, the other central banks are all cutting. There's going to be this big differential strength in the dollar, which is a concern concerning everyone at the moment. So we'll have to wait and see. But at the moment, we don't think there's a strong possibility of rate cuts next month from the Fed. So that carry trade remains in place. Nvidia lost about $350 billion yesterday. And if you look at the Nvidia chart, which I'll show you shortly, it was only about a 3.5% correction. So 1% is about $100 billion. It's a lot. Japanese inflation ticked up yesterday. The Royal Bank of Australia kept their interest rates unchanged. Jobless claims went up in the US yesterday. The Philly Fed numbers all came down quite badly, really bad for sort of an important economic indicator. Housing starts were down. We got housing coming up in a little bit later on again. That was new houses, and actually housing sales, existing houses, come out later on today in about half an hour. And then gasoline stocks dropped, causing a bit of a spike in crude oil. And then the natural gas storage report comes out today. So lots happening on the economic front, and the markets have been all a little bit strange. What I want to do is go through the charts with you now, go through all of the things that we've got on in some brief format, just to give you a clue. I need some Coke. It is Friday, so I thought we could have a quick live stream, seeing as you've got nothing else better to do. Joking. I think just going into the weekend, it's a good idea just to sort of catch up with where we are and see what's going on across the board on all the things that we're trading. So I'm going to try and go across there now, and hopefully the volume won't. Hello, testing. All right. Just let me know if it's okay now that I've switched to the charts. Just type a yes in the screen. That would be great. And Streamlabs is working, sending out these automated notices. That's not me. Thank you very much for Streamlabs. Now I'm going to go across to the charts. That's the software I'm using, and have a look at what's going on. And we'll come back to these. These are fascinating charts. The NASDAQ, S&P, Nvidia, all going from the bottom left-hand corner to the top right-hand corner, almost identically and completely irrationally and out of control. We'll come back to that. Let's have a look at the euro. We went short on the euro right at the top. This was too much to resist really yesterday, even though I did say in the last stream we weren't trading a lot of currencies apart from the dollar yen, because we've been stuck in this range. But look what happened on the euro. We sort of rallied up towards this 50-period moving average. We got a spike high there, just underneath the 50. We came back down, rallied up back to the 50, another little spike, some topping candles there against the 50, and okay, good. All right, so some topping candles here, and then we got in at, okay, let's see, what was the price? 107.44, I think, and we got out at 106.80. So quite a good 65 pips or so. We've got out of that and it's bouncing a little bit now. Nothing else on that this week, I don't think. Dollar yen moving down, and we saw a big volume on these yen pairs, all of them. Dollar yen, euro yen, Swiss yen, pound yen, particularly the pound yen, which I don't have on here, all moving down dramatically in the early hours of trading this morning during the European session for no apparent reason that I could find, except that there was big volume. So we'll see how this goes. Okay, fantastic. Thank you, Brian. It's nice to see you, all of you. Thank you very much for joining, everyone. I love having you in the live stream. We're going to make this more and more frequent, much better, more professional, and less problems like I had earlier today. That if I've got someone helping me, I could probably get away with having a lot less less frequent problems. Now let's look at the dollar yen. This is the interesting one. Let's have a look at the 4-hour chart. We'll have a look at the day chart. This is the 78.6% Fibonacci, the top of this green block here, and it's also that swing high with the bodies of these previous candle stop. That's where the Bank of Japan intervened last time. We reached there yesterday, but we pushed through it, which was surprising. I drew a big blob there. It's my favorite word. That I think I was hoping that we'd poke up through that 786, through that resistance, the bodies of those candles, and then come back down again. But we didn't. We just held up there. I don't have huge leverage on this, but I've got positions which are way out of the money, but at small leverage. So there's no risk here at all. It will come down eventually. I don't think we're going to get above 160.4, which was the previous level where the Bank of Japan intervened. We might spike above there, but I don't think we're going to close above there on a daily basis. And we're just trying to top out this morning. We'll watch that and see how that goes. I've got nothing else. We're short on the euro yen as well. That one dropped off dramatically. These are 4-hour charts. This was the last move on the euro yen in the last 4-hour candle, dropping down quite fast. Natural gas comes out later on. This too shall pass. In fact, I'll show you the economic report shortly. So yeah, that's moved down through this order block, but we bounced back and got trapped back in there again. And that's where we are now. So we need to get out of this red order block, but a nice move, about 120 pips down today, which is good news for those short as we are. Nothing on the pound. Bank of England kept its interest rates the same. You'd have thought the pound would have got a bit of a bounce from that, or a little bit more enthusiasm, but it's just languished and actually moved down and not up, which is interesting, showing that there's incredible weakness going on in the Eurozone and in Britain, despite the fact that the inflation rate has come down in England down to 2% now, and despite the fact they haven't raised rates because of that. If you remember, the inflation rate in the UK was well over 10% for months on end, and those prices will never come down. So everything's inflated by 10, 15, 20%, 25%, I think, maybe 30% actually in the UK over this last inflationary period, and that will never come down. That's fixed, and any incremental inflation on top of that, the 2% or the 3% or the 1% every month, is just going to add to what's already there and built in to the cake. So those of you who are living in the UK, you better start earning some more money, because you're not going to get a reduction in prices anytime soon, and you're going to be suffering from the effects of inflation, as is the rest of the world, including here in South Africa and in America and in the rest of Europe and all sorts of other countries. And even Japan has its inflation rate ticking up, even though its interest rate's 0.25%. So quite chaotic, really. In terms of all of that. Now, let's go across and have a look at the NASDAQ. I pointed this chart out to you, NASDAQ, S&P, Nvidia. All of these charts go from the bottom left-hand side of the screen up to the top right-hand side in a 45-degree perfect angle. And they all look exactly the same, except that Nvidia is a whole lot steeper. Nvidia has, on this chart, remember we had a 10 times reduction in the share price, a 10-fold split in the share price recently. And keep that in mind, but calculate it. But look at this. This is 2023, beginning of 23. On this new pricing on these Nvidia shares was $13. We're now at $130. We've gone up 10 times in a year. I think that's 1,000%. Is it? Or is it 10,000? I don't know. Can't remember. I always get those wrong, so I don't know. But absolutely incredible. But look what happened to Nvidia yesterday. We topped out at that level, sold off by 3.5%. Today we've gapped down again a little bit. We'll open a little lower at 128. We're short on Nvidia. And actually, I think our target on Nvidia could just be simply the 200-period moving average for a start. That's down at 68. We're at 130. We're twice the height of the 200-period moving average. But as this moving average creeps up, it'll meet this swing low here at 75.5, thereabouts, in time to come. In fact, you can project if this MA moves up, it'll slow down now that we've started to make a top. It'll eventually get up to the 75 level, and I think we could meet that with price in time to come. So we're at 130 now, 75 looks reasonable. I think we could get a whole lot lower. I'm not sure if we are going to get the same sort of thing that we had in the dot-com bust and boom and bust with Cisco and all those browser companies. If you remember Netscape and Yahoo, and there were a whole lot of other ones, and they all went bang, not quite bang, but dropped off a whole lot. Could the same happen with Nvidia? I'm not too sure. AI is a confusing and surprisingly strange topic because no one's really quite sure exactly what it is or how it's going to benefit humankind. It's all very nice having music produced like I showed you earlier. Go and check out my music videos on this channel produced by AI. They're just fun. You can play them in the background. They're 20-odd songs, which is kind of fun. And I hesitated to put those up on YouTube because people say, well, you're not being serious. This is a serious channel. You can be serious and have fun at the same time. There's no problem with that. There's some great songs that AI produced. And if not anything else, it's just fascinating that AI can produce and mimic human voices so perfectly. But is there any better use for AI in medicine, in energy, in research, in space travel, whatever it might be, education? Probably. But is this going to be the savior of mankind to the extent of thousands of percentage points of rallies in chip stocks? I don't know. But we do know that the only reason we have AI, and it's really just changed names, it's just a computer with incredibly powerful chips that can churn through big data, a lot more information than it used to. So we're short on Nvidia. We are going to gap down at the open in about 15 minutes. And I'm aiming for somewhere down about the 75 level to start with, maybe the top of the swing high. We could get to 100. Let's go with a round number, 100, just below 100, maybe 98. I like the 8s and the 2s. So 100, and then maybe with a bit of luck, 75, and maybe with a whole lot of luck and a bit of disaster for Nvidia in terms of competition, cheaper stocks coming into the market, cheaper chips, and also just the hype dying down a bit. We could see this move down quite sharply. Now let's go look at NASDAQ very quickly. I'm not going to do too many other things. I'm looking at a firm, by the way, for a buy. You can put that in your notebook, AFRM, A-F-R-M. You're looking at that for a buy sometime next week. This is the NASDAQ moving down, and I put some stuff up on X. You can go and have a look at that, saying, could we get a 15% drop? If we drop into this narrower channel here, we'll get it's about a 10% drop down to the bottom of this channel and this order block. If we get a 15% drop, we could get down into this order block and the bottom of this channel somewhere down here. That could take us down to about 17,000. I don't know if we're going to get more than a 15% correction on the NASDAQ before the elections come along. We may have to form a range between, let's say, 17,000 and 20,000, a very big range, a 3,000 point range, but maybe form that range for the rest of this year. So looking to sell around here, buy perhaps at this green channel, maybe buy if we get down to 15% lower. I don't know. We'll have to see how this works out. And as during the last live stream, I said to you, many people are bullish on NASDAQ, S&P stocks in general, and many people are bearish at the same time. It's a very divided market and a lot of conflicting opinions on it. So I think you've got to set your stand in the sand and say, well, okay, I've set mine. I'm saying this is a top at just over 20,000 for now. And until that is closed above on a daily basis, I think my camera has failed. I hope you can hear me. Yeah, I hope you can hear me. So unless that closes above 20,090, I think it was, on a daily basis, I'm assuming that the direction is now short. All right, same with S&P. We haven't got any positions on S&P, but I'll be looking at the same sort of thing. I would like to have got to the center line on S&P, or maybe even the top of this channel. We didn't even get to the center line and we're turning down now. I think we could still try and test that center line at least, but a lot of it will depend on the way the rest of the market goes. So let's reset that scale. So nothing on S&P, but we're short on NASDAQ, short on Nvidia. We're looking to long a firm, and I'm also constantly looking to get opportunities to buy Apple and Tesla, and I'm hedged on both of those at the moment. There's something wrong with this phone and the way it's communicating with the, okay, great. I don't know why my phone's freezing. It's another technological issue we have to sort out at some point. It's going across to gold and Bitcoin. I thought gold was going to fail, as you know, despite the fact that I'm long on gold. I thought we were going to fail here and move down to the trend line. So I'm pleasantly surprised because I'm right, and I'm surprised that I'm wrong, but pleasantly surprised because I'm in the right direction. So we're moving up there. Looks like this head and shoulders has failed, but we've got to get above this right-hand shoulder level. The next target will be up underside of this trend line and the top of this previous range back up to 2454. And that's my plan on gold. So we're long on gold. And we're also long on Bitcoin. I put this up on X. Let's have a look at the broader picture of Bitcoin, because this tells the story, really. We've got some beautiful technicals here. First of all, we've got this big move up. Then we've got this channel move down, a bullish flag or rectangle moving down. And then we've broken up there. We haven't got back down to the underside of this, the top side of this channel yet, but we have got this little falling, descending wedge here, which looks like it's actually busy failing at the moment. And we may have to use this path at the bottom here. Alternatively, we might just turn here at the bottom of this trend line, a nice, beautiful, this is a daily chart, and bounce off here. But if not, we'll add some more down here at this order block. And my stop loss or reversal area is somewhere below 50,000. And I have relatively small positions, so I've got plenty of opportunity to add into this. And the great thing is you can make a lot of money on relatively small unleveraged positions on Bitcoin because it moves such a long way. So we don't have to risk a lot. And if we get the direction right and make sure we minimize the downside risk, we can get a huge amount of profit on the moves. And in this case, until we actually fail, my direction on Bitcoin remains up. My average position remains around 60 odd thousand. We did get in much lower down. We took profit on that, rebought at 60,000 after that pullback. And we're back in long again. Let's see how we go. If we look at this on the 4-hour chart, you can see what I'm talking about in terms of this channel. And there it is, or this descending wedge, falling wedge. There it is there. It's a really nice support line. We haven't broken it yet. And maybe we'll hold. I don't know. I wouldn't mind actually if this breaks down, because I'd like to get some cheaper positions down in this region somewhere, closer to 60,000, which is where my original positions are. And I'd like to actually add a little bit more if we see a concerted effort to bounce off there later on, perhaps next week, maybe this week. I do believe that there are some cycle lows. There are some folks over on YouTube who are talking about Bitcoin cycles. I'm not much of a cycle trader, although I do think there are cycles in the markets. I'm not too sure about the Bitcoin cycle, but there are some traders who think we are now, I think it's today, is the cycle low. Well, it's certainly low, but it hasn't bounced. So anyway, that's our position long at 60K roughly, adding little bits as much as we would like to, really, as it drops close back down to our original entry point. But I'd like to see perhaps a final thrust, maybe down to 58, actually, just a dip below there, and then a roar back up, and we'll try and add some more and get hold of that big move if it happens. I'm not saying it will. I think it's going to, but I don't know. Copper's broken down through its trend line. I was wary about this. I told you we'd try and get up through that trend line. We didn't manage to do that. We've fallen back down. Perfect breakout pullback. If you want to learn about trading, one of the most useful and exciting and simple trading techniques is the breakout pullback technique. We talked about that on Bitcoin just now. So we broke out through the trend line, pulled back up to the underside of it, and we started to move down. That's what I'm talking about on Bitcoin as well. Let's just quickly have a look at that and show you what I'm talking about. On this daily chart, exactly the same principle, a really good system to trade. There's the flag, this large green channel. We broke out, we've pulled back, but not all the way. Ideally, we would pull back to the top of the channel. In other words, revisit, as some people like to say. One of my acquaintances likes to say, revisit the scene of the crime. Well, we always like to do that in trading if we can. It doesn't always happen. We might not get the pullback down to the scene of the crime and the order block, the channel top, the 200 moving average coming up there. We might not get that, and it might bounce here. But the safest play is the second red arrow here, wait for the breakout. We've had that. We formed the pattern, very clear triangle pattern. I shouldn't extend these lines all the way down here, but it's there. Very clear breakout, pulling back, and then the next move is up. Now, that's exactly what I was talking about on whatever I was looking at just now. Oh, on copper. So there we go. On a shorter term, this is a daily chart, break through the trend line, pull back and break down. Silver, going along with gold. I don't really trade silver much. Going across to natural gas and various energies. I've got some interesting and important news to talk to you about natural gas. I'm going to be calling trades now on a spot natural gas price, not the futures. 90% of my followers on YouTube and in my private group trades the spot price. They don't have to deal with rollover, contango, gapping, adjustment, retracement back into the rollover gaps, messy charts. Most people don't like to trade like that, and I don't blame them. I managed to make another profit this month on this last contract, the July contract, but I could have made a lot more if I was trading the spot price. There are pitfalls of trading the spot price. We'll go through that shortly. I want to cover that. It's an important topic. We're long on natural gas from this level. I put this up on X. You've probably all seen it. If you don't follow me on X, it's a really good idea to do so, because a lot of the stuff you won't get immediately through videos and so on, because it's just logistically not possible. I said we'd bounce here. We took another long position on natural gas at this level, 2.72, actually exactly where we are right now. No, 2.71 was my entry price, and I'm allowing for a move down to 2.6. That would be my best entry price if I could get that. I don't have a massive position on here. I'm going to talk to you about my positions shortly and how I'm going to illustrate them to YouTube and to my private clients. I'm using a broker specifically for that on the spot price. That's Pepperstone, by the way, because it's not offered on Black Bull, where I trade most of my other stuff. No natural gas spot price, only the futures. And the futures tend to be traded by bigger traders. You've got to take a big contract. Costs, there are no rollover, daily rollover costs if you trade the futures like there are on spot. The rollover costs on the spot price is there to deal with the contango and backwardation on the futures rollover. So, but you don't get that when you're trading the futures. So you don't have to worry about that. When you're trading the spot price, you have to worry about daily costs and holding overnight. Not as bad as trading UNG and Boyle and so on though. So I will talk to you about that very shortly. But we're long on natural gas from 2.71. We're short on WTI. We just took another entry short right here, actually, at 81.44. We went short again, so we have another position here. Let me move that arrow down to illustrate. So we went short there. And those are our positions on on WTI. I think WTI is going to hold here. I hope it will. It might spike up to this next level, this longer term top trend line, but anything around about 80, where we are now, 81.50 to about 84, 83.50, 84, the top of this block here, and the underside of this downward channel, the 78.6% fib, that is the ideal place at $84, let's call it. And I would actually say 84.20 or 83.80. I always go for the 80s and the 20s, and it's probably completely misguided my obsession with those numbers. So that's WTI. We're short there, long on natural gas. That's bouncing very nicely, by the way. This is the new broker that I've got this on at Pepperstone. This is directly from Pepperstone, as you can see on the chart there. And this is a spot price. There are no rollovers. There are overnight fees to compensate for the rollovers. I want to talk to you about how these prices are calculated shortly. And that's it. We're long on sugar as well. If you're interested, we're long on UEC and URA. UEC powering up, V-shaped bottom. We got long. We're long from about this price and long from lower down into these levels. We got long again. We're long URA. Just both those are going to sort of meander over time, and we'll be buying dips, getting out on rallies. Buying dips, getting out on rallies. That's the idea with those two. Natural gas, we're switching to the spot price. That'll be a lot easier for people to follow, a lot easier. And I'm looking forward to that. I'm going to talk about that in some detail shortly. Running out of time already. We're South African Rand. This is the story of the day. We covered it in the last video. I mean, look at these moves. This is the Rand against the pound, or the pound against the Rand. It's inverse. And that's moved down, the biggest move I've seen in a very, very, very long time in favor of the South African Rand, and that's powering down. I think we're going to see, and I'm not going to go into the politics of it, and this new government of national unity and the optimism and pessimism, balance that's going on in South Africa, the swings. But this chart illustrates to me that there is stuff going on behind the scenes that the public's not aware of that's very, very positive and optimistic in terms of the South African economy and perhaps a recovery in this very beleaguered country. This move here is incredible, but it's not going to last. And what I think is we're going to bounce somewhere around here before the weekend or over the weekend when realism sets in, and we're then really on this knife edge. Are we going to go well and grow as a country and gain some sort of financial stability again, or is everything going to go wrong? And I've still got these two arrows. We took the red arrow, we took the red path, not the green one, because I was basically taking the first move that occurred after those elections and the government of national unity was formed. And the first move was the one I was going to take, and it was down, and we got in right at the top. But I think we're going to have to recover a little bit, quite a lot actually, and I'm going to suggest that we could get all the way back up on this one, almost into the red block again before revert. We could even get a little higher before reversing and moving down. Now let's have a look at the dollar rand, because that's the one that most people trade. I showed you the pound chart because it's the most dramatic. Similar here though, but this is what I think we're going to do on the rand against the dollar. And believe it or not, I think we could get to 13, 14, 15 rands to the dollar, and we've been very close to 20. That was the all-time high so far, 1991. And my thesis for now, like I said earlier, produce a thesis and stick with that until you're proven wrong. That's the easiest way to trade. Decide on your idea, fix that idea in mind, find out and determine in your own thinking and mind, and even write it down, what is the point at which you're going to be completely wrong on this trade, and then you can adjust your position or adjust your thinking or change your mind. Nothing wrong with changing your mind, but you need to set a concept or a theory or an idea in place. So that's what I've done. So the top for me in the rand is 1991. Call it $20, 20 rands to the dollar. I wish it was $20 to the rand. When I was living in England, we moved in the 70s. I moved to South Africa, and we moved from South Africa. I think we were visiting South Africa from England. I took a 1 rand coin I remember it really clearly, to the currency exchange desk at Heathrow Airport. And for my 1 rand coin, I think it was a note, not a coin. It would have been a note. My 1 rand note, I got 2 £1. I think there were notes too in those days. So I got £2 for 1 rand. And now I need 20 rands to buy £1. So anyway, I think that's what's going to happen. But I think we're going to have to bounce. We're going to see the optimism is going to fade a bit over this weekend and the coming days and maybe a week or two. And I think we're going to get some uncertainty creeping back in. We're going to zoom back into this area. This is the dollar rand. And then eventually move back down and start to create a downward trend on this chart, which we have not seen properly really in about 30 years, which is quite phenomenal. I think it's amazing. We're long on the VIX, bouncing up again. I can't remember our entry price. I think it was below $12.80 at this 20-period moving average, I think. So 12.80, we're at 13.60 now. So not much of a move, but is it going to be free fall Friday? If so, the VIX will soar up, stocks will fall down. I joked in my private group that free fall Friday is this thing. It's great to say it, free fall Friday, but it hardly ever happens, almost never. Maybe once or twice in the last year we've had a free fall Friday, so it's not a thing. It's just made up. But I like saying it. And that's it, folks. Those are my positions. I'm going to go through some of the questions. Oh, no, I've got one more thing I want to show you quickly. Before we do anything else, I'm going to show you this trading account. Yes, it works. Brilliant. Right, this is C Trader, and what I have here, this is a live account with only $200 in it, and I've got my natural gas positions. It's 272, not 271. I'm going to use this account. I'm going to put a lot more money in it's the first time I've used Pepperstone. I don't know anything about it, so I'm going to put a lot more money in it. I'm going to try it for a month or 2 or 3, and then if I'm happy with it, I think it's a really good company. They're regulated in Japan, in Australia, and I think in the UK. And that's a very unusual combination of regulatory oversight over a broker, which bodes well for them. And I like their trading platform. They've got a wide variety of stuff that you can trade, including all sorts of Commodities, spot prices on indexes. You can trade the dollar index, which I can't do at Black Bull. You can trade the Japanese yen index, which I can't do at Black Bull. And then the commodities list, you've got sugar, coffee, cotton, cocoa, wheat, soybeans, orange juice, and lumber. And it just goes on and on. Nickel, zinc, and oats. I've never traded oats or cattle or hog meat, lean hog or pork belly, anything like that. So all sorts of fun things to do there. Right now, I'm just using it for natural gas, and I've got my entry positions here as I described to you earlier. There they are on the chart. I'm a little bit underwater by about $1. It's a $200 account. I've got very small positions, as small as I could put on this account. 2 of them. Should have put one position. I don't know what the rollover costs are just yet. In fact, I do. I can have a look. This has been one night. I put these positions on yesterday, and I've lost 4 cents out of $200. So that was the rollover cost. 4 cents out of $200. That's 2 cents out of $200. Very, very reasonable rollover costs. I think this gets adjusted as we approach the Henry Hub futures contract rollover at the NYMEX. And that might change. I don't know. We'll figure it out, and we'll play around with it and see what happens. Now, the last thing I want to show you, talking about that. So if you're trading in my live group or following me on Twitter or following me on YouTube, I'm going to use this as a reference. And at some point very soon, I'm going to try and get a live stream going in my private group with my natural gas live account on screen 24/7. You can see exactly what positions I'm in. As I increase the size of this account over the next month or 2 or 3, I'll start to trade more symbols on here and perhaps have a live stream permanently on that you can just look at. I subscribe to Surfline, for example. They've got live cameras on all the surf spots around, not all the surf spots, many surf spots, popular surf spots around the world, and you can just go there onto the web browser anytime you want and see what's going on at that surf spot, who's surfing, what the surf's like, what the weather's like, what the wind's like, and so on. Now, that would be great to be able to do that with a trading account or a chart. I could do this on TradingView, in fact, because on TradingView I can show you these live positions on the same chart as well. So I think it's going to be great, and any time, day or night, you'll be able to just switch on your computer, see what trades I've got on, and see if there have been any adjustments or any changes since you last looked. And of course, I call those updates in my trading room as well at the same time. Right now, last little thing. I want to go back to the browser, and that's X. Once again, follow me on X if you don't do so. And I'd love your subscription today and your thumbs up today. That would be great. And if you'd like to make comments like other people are doing in the chat room, you need to join the channel. I'm keeping this for members only going forward, so that members get the benefit of being able to ask me questions during the live chat. If you'd like to be able to do that, I'll answer any of your questions that you put up in the chat, but you need to be a member. It costs about $1 a month, $1 a month. And there's a join button below here below this video. But what I wanted to show you, apart from my natural gas download, Gasping for Gains, go and check that out. It's on this channel. Right at the bottom, there's a playlist for natural gas. You can download all of those songs. But I wanted to show you something. I hope I haven't lost it now. I think I have. Did I get rid of ChatGPT? Let's get back to where we were, and we'll be finished in a minute or two. I did ask it a question. Spot natural gas calculation. Okay, so if you want to know how on earth it is possible to get a spot price out of natural gas, and how your spot price is calculated when the actual market trades in futures contracts mostly, and even options and various other things, the spot price is kind of made up. Although people trade in spot natural gas all the time, and people make up prices. It's a market. You can decide what price you want to set. Brokers do very similar. I want to read this to you very quickly so that you understand where that spot price comes from and what the pitfalls are. Let's read very quickly. Pepperstone, like many trading platforms, typically uses the front month futures. That's what I've been trading over at the NYMEX on Black Bull, the Henry Hub. Typically uses the front month futures contract as the primary reference for the spot price of natural gas. This is because the front month contract is the most liquid and closely reflects the current market sentiment and supply-demand conditions. Now, here's a more detailed breakdown. Front month futures we know what that is. So these are the components of the spot price. Front month futures, that's the Henry Hub. I'm assuming they use the Henry Hub price over at NYMEX. The rolling over contracts as the front month, and this is the important point, and this is where the overnight fees come in, which they don't do on the futures. As the front month contract approaches expiration, Pepperstone will roll over into the next month's contract. This means they'll start using the price of the next futures contract as their reference. The timing and the methodology of this rollover can vary by platform or broker. And this is where they won't tell you what they're actually doing, and they could actually manipulate it if they wanted to, because they don't tell you. The timing can vary by platform, but generally occurs a few days before the current contract expires. Blended price. It's another idea. Whilst the primary focus is on the front month, some platforms may occasionally use a blend of the front month and the second month contracts to smooth out the transition during the rollover period. This is what Oanda does. I'm not sure if Pepperstone does this. Let's read on. So you get this blended price between the front month and the following month, and they weight it bit by bit towards the following month as we approach the rollover, which, by the way, is early next week. My brokers are already rolled over on the futures at Black Bull. So that's blended pricing. I think that's what Oanda does. I'm not sure if that's what Pepperstone does. They'll never tell you. But there's obviously got to be some blending involved at some point. Further out contracts, now not the front month, not the second month, and we're talking about the third and fourth months out, are generally not used for calculating the spot price because they are less liquid and can reflect longer term market conditions. So it's a good idea to keep those future months in mind because they do reflect longer term sentiment, but they have very little effect on what's happening right now in terms of the pricing of your spot price instrument at your broker. In essence, Pepperstone's spot natural price is closely tied to the front month futures contract, ensuring it reflects the most current market conditions. The use of further out contracts is minimal or non-existent. We don't know which. Which one is it? We don't know. And there's quite an important difference between the two. But anyway, for the immediate spot price calculation, focusing instead on the near-term liquidity and price discovery. So just to let you know, so you understand why the spot price is a spot price, where it comes from, and the fact that you can never really know how it's calculated unless you have some into Pepperstone or Oanda or FXCM or whichever broker you're using. You may be able to get that information. I don't know. That's all I wanted to tell you about that. And then the economic calendar a little bit later on today, we've got the S&P Global Manufacturing PMI. That's a big number, expected to be more or less the same. The services, more or less the same. And the composite, more or less the same. So I think those could actually surprise to the downside. We'll wait and see. And then the natural gas storage report, which was meant to come out yesterday, and the rig count is coming out today. That's the Baker Hughes rig count and the EIA Natural Gas Stocks Exchange. Let's go back to the charts and switch over. And what else can I show you here? So I've showed you C Trader. So once again, if you'd like to know what I'm doing with my trades day and night, at some point, I'm hoping to have a live 24/5 live stream, starting with natural gas and then moving to other instruments. So I'd encourage you to think about joining up for that. I might even have it on a private channel, just streaming on YouTube constantly. If I can get computers that don't overheat. I've got 3 MacBooks, the MacBook Airs. They don't have the greatest amount of RAM and they're incredible computers, but very small hard drives, and they're solid state drives and very, very small solid state drives. In fact, this one that I have here is 4 terabytes, and that's something like 10 times larger than the drive on my MacBooks. So they tend to overheat because I think the RAM gets used up and you get all this clutter building up in the system, and after about 5 hours it all starts to freak out. But we'll overcome that. We'll have this live stream going. And then back to the charts, left one more look to see if you can see what's going on. Let's skim through them. So yeah, dollar yen, incredibly frustrating. I don't think we're going to get above 161.40 though. And I don't have huge leverage, but I've got a big gap between where I got in and where we are now. Once we get a daily reversal, and then particularly a weekly reversal, I'll start to put some more short contracts on at the top and that will quickly erase the gap between where we got in. Euro yen going a lot better. That's come down nicely. And then Euro US dollar, as I said, we took profit on. And just skimming through here, market's about to open in about 45 minutes time. No movements really on NASDAQ, S&P, Nvidia moving up a little bit. A firm I said I'd talk about, we'll probably cover this in another video. We've got a beautiful downward triangle, downward sloping channel line, a bull flag potentially. It's too long though, I don't like the length of it, but this is a long drawn out sort of instrument. It tends to be, kind of drawn out. This is a very drawn out correction, but I think we could get something like this. Are we going to bounce off this channel center line more or less where we are now, or could we get down to about $23.60? We're currently at $30. I think the highest probability trade is down here, down at about $23, $24, something like that, and possibly this channel center line at $28.40. For those of you wondering about a firm, that's the only other one I've got eyes on right now. Apple and Tesla, I'm basically looking to keep going along on those, but I'm hedged for now because of the pullbacks. So, and then gold, Bitcoin, we've talked about, no movement since the last update. And natural gas, no real change, just bouncing up there. If you look at this on the Henry Hub at the day chart, Henry Hub, it's exactly where we are, 618 fib, 20-period moving average. I don't like the fact that we've closed beneath it at all, but we are trying to bounce. If we don't bounce here, we'll have to get down to $2.60 and maybe even the 200-period moving average back at the swing low, and that's down at $2.47. And don't rule out that happening. If we do get down to 260 and even 247, I'll be all over that like white on rice, as they say, and looking to buy at those levels, because I think we're going above $3, and I think we're going to 350, 345, 50, 60, something like that. And then I think we could get up to closer to $4 and maybe even more. And that would take an extraordinary events and supply restriction and demand increase, some catastrophe, inordinately extreme weather. I don't know. Anything can happen. It's that sort of commodity. It just experiences wild fluctuations because it's affected by so many things, not least things like shipping and weather and demand and typhoons and hurricanes and drills running dry, drilling sites and rigs running dry, and the whims and fancies of governments and green energy protagonists. So the whole thing's a real, I'll call it a shift show with an F in, as in Adam Shift, a real shift show, natural gas, and it requires very steady hands and very careful trading. I haven't had a losing month I've had one losing month on natural gas in the last 24. So I kind of got a handle on it. Doesn't mean I'm better than anyone else. I've kind of got the rhythm and the flow of natural gas. And I kind of like it because it's a little bit like the VIX. When it gets down into very low levels, you know that it's going to move up. It can stay down there for a long time. And you get the rollover problems if you're trading the futures, and you get the carry costs if you're trading the spot. But you know that if we get down to about $2, it's going to go up at some point. If you get to 150, it's definitely going to go up. And below $3 is generally quite a good price. Above $3 gets a sort of in between. And that's the way you trade it, really those simple things. And then, of course, you've got to look at things like weather and storage and demand. Industrial demand is going to be the big factor. Brian is here from Energy Rogue. Welcome, Brian. I was at Brian's live stream yesterday. He had a great live stream talking about some of the things and talking about the technicals of trading natural gas. And he agrees with me. Our biggest threat to the price of natural gas increasing, which we don't really want because people have to use it to heat their homes and cool their homes, and we have to use it to produce things in industry. So we want natural gas prices to be as low as possible for the benefit of everyone. But as a trader, I'd like at this point, right now, because I'm bullish, I'd like it to move up. The biggest threat to this pushing up through $3, through $3.50, through $4, up to $4.50 and so on, is industrial demand. And we've seen these numbers that I've just read out to you at the beginning of this live stream are dropping off dramatically. Industrial production and all sorts of problems creeping in that are starting to make this economy globally creak at the seams. And that will affect natural gas for sure, particularly China and the US. in terms of demand. And Brian over at Energy Rogue, I'll put his link up in the chat shortly, is more skilled in those matters in terms of supply and demand and the fundamentals. And I think that's it, folks. Now I'm going to try and read some of these comments quickly to you. I mean, you can see them here, so I'm not going to read them out actually. I didn't realize that in these previous live streams, I'm not very familiar with live streams. In my previous live streams, I was reading out all the questions because I've forgotten that you can actually see them on your screen. So you can see them. So here we go, everyone. Just reading the comments. We'll get the sound sorted out if it's still not great. All right. Yeah. Oh, thanks, Brian. You like my shirt? Yeah, it's my favorite shirt. And you know what? I bought this at the cheapest clothing store in town. It's called Pick and Pay Clothing. And I think it costs 30 rands, which is well, like $1.50, maybe $2. It's not the best quality, but it's a great print. All right, lots of comments from This Too Shall Pass. Lovely to see you again, always, of course. And don't forget to like and subscribe. I'm just reading the comments, not saying that again. Your like and subscribe would be great. Actually, I think Streamlabs gone a bit overboard, saying it way too many times. I'm going to try and cool it down. I'm sorry about that, but it's one of the things I can sort out. All these likes and subscribes. Brian says, in the physical natural gas market, the spot price is the fixed price for physical natural gas. Sounds like Pepperstone is more of a derivative calculated from their own holdings and rollover. Yeah, so Brian, it's impossible to know how they calculate the price, but I've observed that their price over at Pepperstone, and I trust Oanda, they've been around forever. I don't think they get up to too much nefarious stuff. And of course, I trust the Henry Hub futures price over at the NYMEX, but I don't know what goes into all of these spot prices. And I think it's just made up, really. They try and keep it as accurate or tradable as possible, otherwise they'd lose all their clients. But at the same time, it's a bit of a thumbsuck, in my opinion. But that's just what I think. All right, folks, have a fantastic trading day. Market's opening in 40 minutes' time. Unless there are any other questions, I've got nothing further to add to this. If you'd like to ask questions in the future, please just join this channel, and that'll help the channel, and it'll help you. And it's only $1, I think. Maybe it's less than $1. I think it could be 80 cents or something. And then at least you're in the fold, and you'll get these live streams and the ability to chat with them within them as a member, and also early videos and extra comments in the community section. Okay. Voila. Have a great day, guys. Good luck. Have a great weekend, and I shall see you. I'll probably do a video on Sunday again prior to the open, so look out for that.
Tango, losing my mind. Gas for days, fear in the veins. Natural gas flame heating up the game. Excitement, green, dope in the vein. Longs and shorts dancing in the rain.